Welcome to Hong Kong Brief. The content of the briefing includes: China convenes Hong Kong bankers in bid to revive financial hub. Hong Kong's property pain may soon get real. Chinese stocks fall as key economic meeting disappoints. Wanda tycoon pays price for overexpansion. Asian stocks mixed ahead of Fed decision, oil prices slump. China convenes Hong Kong bankers in bid to revive financial hub. Bloomberg. China's Ministry of Finance is holding meetings with bankers in Hong Kong to discuss ways to strengthen the city's position as an international finance center and address the challenges it faces. The discussions will focus on enhancing Hong Kong's status as an investment hub and strengthening ties with mainland China. Hong Kong has been grappling with immigration, a decline in deal-making activity, and competition from rival hubs such as Singapore. The Chinese government has previously pledged to support Hong Kong's unique status and role as a link to international markets. Hong Kong's property pain may soon get real. Reuters breaking views. The leader of Hong Kong, John Lee, is planning to crack down on illegal structures in the city, a move that would frustrate the wealthy but please Beijing and the public. The issue of unaffordable housing in Hong Kong is a growing concern, with the cost of a modest apartment still reaching close to 19 times the median annual income. Lee intends to prosecute those who have built illegal structures and is considering a citywide survey of houses built on slopes. While a crackdown would initially hurt the wealthy, it could also have a negative impact on the broader property market. However, the Chinese government's efforts to curb speculation in the mainland's property market make it difficult for Lee to ignore the issue. Additionally, the influence of Hong Kong's tycoon landlords is waning, which may make it easier for Lee to implement changes. Chinese stocks fall as key economic meeting disappoints. Bloomberg. Wanda tycoon pays price for overexpansion. Reuters breaking views. Wang Jianlin, once Asia's richest man, has given up control of his mall operator, Zhuhai Wanda Commercial Management, to avoid a $4.1 billion funding crunch. Dalian Wanda, China's biggest landlord, must now prove that its assets are attractive to shoppers and investors. Wang has already sold off assets worth over $25 billion since 2017 to recoup cash ahead of China's nationwide deleveraging campaign. However, Dalian Wanda still faces significant liabilities and may need to sell off more assets if the property market does not recover. Asian stocks mixed ahead of Fed decision, oil prices slump. Yahoo! Oil prices have dropped to 6-month lows, with Brent crude reaching $72.75 per barrel, while U.S. crude reached $68.14 per barrel. This is reportedly due to concerns about oversupply and a lack of demand. The price drop came as traders awaited the final rate decision of the year from the Federal Reserve. The central bank is expected to keep rates on hold, but there is speculation that the press conference will reveal potential cuts for 2019. Sweden posts sharp home price plunge as rates hit global markets. Bloomberg. Home prices in Sweden have dropped 11% year-over-year, marking the sharpest drop in 56 global markets tracked by real estate company Knight Frank. The decline is due to higher interest rates hitting a market that surged during the COVID-19 pandemic. Around 20 other markets also saw declines, including Hong Kong, Germany, the UK, and China. The declines contrast with an overall increase in prices globally, which were up 3.5% on average this past year. Homebuyers in Sweden are also facing an economic recession, with half of all homeowners having floating mortgage rates. China poised to inject cash to aid liquidity, boost growth. Bloomberg. China's central bank is expected to inject 325 billion Chinese yuan, $45.3 billion, of cash into the financial system through its medium-term lending facility on Friday, countering tightened liquidity partly due to large bond sales. The cash support is needed as Beijing rushes to sell 1 trillion Chinese yuan of sovereign debt in the last 2 months of 2019 to support the economy. However, the central bank is also expected to keep the one-year policy rate unchanged at 2.5% as Beijing has signaled that it will rely on fiscal measures to counteract the headwinds facing the economy. Big money managers name top investment ideas for Asia in 2024. Bloomberg. Asian fund managers are recommending buying the yen, selling Japanese bonds, and investing in Indian and Indonesian stocks for 2024. They believe that the Bank of Japan will be forced to end its negative rate policy next year, leading to a stronger yen. They also expect Japanese bond prices to fall as the Bank of Japan tightens monetary policy due to quickening inflation. Indian equities are expected to rise due to strong earnings growth and increasing private investment, while Indonesian bank stocks are seen as attractive due to their strong deposit franchise and ample liquidity. Hong Kong illustrator seeks to preserve culinary heritage through art. Japan Times. Hong Kong artist Tam Ka-yen is using her online illustrations to reconnect Hong Kongers with their culinary heritage. With close to 175,000 followers on Instagram, Tam documents the delicious food she encounters in her daily life, experimenting with different art styles. Her illustrations have evolved into the watercolor style she is known for today. House panel urges tougher trade rules for China, raising chance of more tariffs if Congress agrees. Associated Press. A U.S. congressional committee has called for the alteration of the way Chinese-made goods are treated in the U.S. The committee recommended the introduction of higher tariffs on Chinese goods without removing China's preferential trade status, thereby creating a de facto repeal. Members of both parties endorsed the proposal, reflecting a growing willingness to build on tariffs introduced during Donald Trump's presidency despite the risk of retaliation by China. For Tokyoites, bicycles are the real deal. Nikkei Asia. Tokyo has become a haven for cyclists, as the densely packed city's narrow streets and heavy traffic help make residential areas quieter and safer. Unlike in other cities, where dedicated bike lanes are often interrupted or taken up by parked cars, Tokyo's cyclists are able to take to the streets and share them with motorists. The city's lack of dedicated bike lanes has not deterred residents from cycling, and the number of cyclists has grown considerably. The Japanese capital cycling culture is considered by many to be one of the most advanced in the world. U.S. doubts performance, yield of Huawei's advanced chip. Bloomberg. The U.S. Commerce Department doubts that Huawei can produce advanced chips for its new smartphone at a scale or performance level that meets market demand, according to a senior official. The official stated that the semiconductor chip inside the phone is of poorer performance than previous versions, and that the export controls on advanced technology are slowing China's technological acquisition. The Biden administration has imposed restrictions on shipments of advanced semiconductor chips and equipment to China, but Huawei and its chip-making partner debuted a 7-nanometer chip in August. The Bureau of Industry and Security is currently probing the chip. Chinese pay premium prices for gold as economic outlook dims. Nikkei Asia. Gold prices in China have risen above international benchmarks as demand for the precious metal increases due to worries about the economy and currency. The spread, or premium, of gold prices in China over the spot price in London has reached around $40. Economic uncertainty and deteriorating international relations are driving China's renewed interest in gold as a safe haven asset. In addition to gold, Chinese investors are also showing interest in Japanese real estate due to concerns about China's property market. U.S. issues sweeping sanctions targeting Russia over Ukraine war. Reuters. The U.S. has imposed sanctions on hundreds of people and entities in China, the United Arab Emirates, and Turkey as part of its ongoing attempts to target Russian sanctions evasion, future energy capabilities, banks, and its metals and mining sector. The U.S. Treasury and State Departments targeted more than 250 individuals and entities as part of the country's efforts to crack down on Russia and its evasion of sanctions imposed by the U.S. and its allies over the conflict in Ukraine. U.S. sanctions China, Turkey, and UAE firms to curb Russia's Ukraine war efforts. South China Morning Post. The U.S. has imposed sanctions on hundreds of individuals and entities, including in China, Turkey, and the United Arab Emirates, as it targets Russia's sanctions evasion, future energy capabilities, banks, and its metals and mining sector. The U.S. Treasury and State Departments targeted over 250 individuals and entities in Washington's latest action to crack down on Russia and its evasion of sanctions imposed by the U.S. and its allies over the war in Ukraine. The Treasury said it imposed sanctions on a network of 4 entities and 9 individuals based in China, Russia, Hong Kong, and Pakistan over the facilitation and procurement of Chinese-manufactured weapons and technologies to Russia. Well, folks, that's all the news we have for today. Let's take a moment to recap what we've learned. China is taking steps to revive Hong Kong's role as a financial hub, while also addressing issues such as unaffordable housing and a struggling property market. Chinese stocks fell after a disappointing economic meeting, and tycoon Wang Jianlin is facing the consequences of overexpansion. Meanwhile, oil prices have slumped to 6-month lows, and Sweden is experiencing a sharp drop in home prices. China is set to inject cash into its financial system to boost growth, and Asian fund managers have named their top investment ideas for 2024. In Hong Kong, an illustrator is using her art to preserve culinary heritage, and the U.S. is considering tougher trade rules for China. Tokyo has become a haven for cyclists, and the U.S. doubts Huawei's ability to produce advanced chips. Chinese investors are turning to gold and Japanese real estate, and the U.S. has imposed sanctions on various individuals and entities in China, Turkey, and the UAE to curb Russia's efforts in Ukraine. Now, let's dive into the analysis. It's clear that China is making efforts to support Hong Kong as a financial hub and address the challenges it faces. The government's focus on strengthening ties with mainland China and enhancing Hong Kong's status as an investment hub is a positive move. However, the city still needs to tackle issues such as unaffordable housing and a struggling property market, which are impacting its overall competitiveness. On the economic front, Chinese stocks fell after the annual Economic Work Conference failed to provide new catalysts or large-scale stimulus for the property sector. This highlights the ongoing challenges facing the Chinese economy, particularly in the real estate market. It's clear that property woes have been a major drag on the equity market this year, and the government's efforts to curb speculation in the mainland's property market are not having the desired effect. In terms of individual businesses, tycoon Wang Jianlin's decision to give up control of his mall operator, Zhuhai Wanda Commercial Management, is a sign of the challenges facing the property sector. Wang has been forced to sell off assets to recoup cash, and if the property market does not recover, he may need to sell off more assets. Turning to the global stage, oil prices have dropped to 6-month lows due to concerns about oversupply and lack of demand. This is something to keep an eye on, as it could have broader implications for the global economy. In the financial sector, China's central bank is expected to inject cash into the financial system to counter tightened liquidity. This move is necessary as Beijing rushes to sell sovereign debt to support the economy. It's also worth noting that the central bank is expected to keep the one-year policy rate unchanged, signaling a reliance on fiscal measures to counteract economic headwinds. Looking ahead, Asian fund managers have named their top investment ideas for 2024, which could provide some insights into future trends. Buying the yen, selling Japanese bonds, and investing in Indian and Indonesian stocks are seen as attractive options. These recommendations are based on expectations of a stronger yen, falling Japanese bond prices, strong earnings growth in India, and attractive bank stocks in Indonesia. Shifting gears, it's always heartwarming to see artists using their talent to preserve cultural heritage. Hong Kong illustrator Tam Ka Yen is doing just that by documenting the city's culinary heritage through her art. With the power of social media, she is reconnecting Hong Kongers with their food traditions and sparking nostalgia for the delicious dishes of yesteryear. Meanwhile, in Tokyo, cycling is becoming increasingly popular despite the city's lack of dedicated bike lanes. The narrow streets and heavy traffic actually make residential areas quieter and safer for cyclists. It's a unique situation where cyclists and motorists are able to share the roads harmoniously, creating a cycling culture that is considered one of the most advanced in the world. Now, let's address the elephant in the room: US-China relations. The US has imposed sanctions on individuals and entities in China, Turkey, and the UAE as part of its ongoing efforts to target Russia's sanctions evasion. These actions reflect the US government's determination to crack down on Russia and its involvement in the conflict in Ukraine. It's important to keep an eye on how these sanctions will impact the global geopolitical landscape. So, there you have it, folks, a whirlwind of news from around the world. As always, I encourage you to share your thoughts and questions about these topics. What do you make of China's efforts to revive Hong Kong's financial hub? Do you think the property market will recover? And what are your investment ideas for 2024? Let's keep the conversation going. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.